Welcome to week number 27 of the year. Last week was quite exciting where we had USD strength really pushing through all the way till Friday until NFP turned things around a little bit. It's quite strong moves from EURUSD, GBPUSD where we saw a little bit of positioning unwind that kind of drove this entire environment and get up some good tradable opportunities. This week we start by having a look at inflation expectation. The anticipation is that inflation expectation for this year has peaked and possibly even for this cycle. That could mean that AUD JPY will find or struggle to find another strong leg higher, and you would imagine that this continues to start climbing down. Also some other pairs. So I've overlaid AUD JPY here with inflation expectation, the United States, and it seems like we found ourselves a ceiling. Be interested to see how we'll trade throughout the summer, but I'll be more interested to see if I can find short on lower legs as we progress throughout the rest of the year. Having a look at the calendar next week, starting actually with EURUSD, what we did see is NFP here. We saw a big bounce in EURUSD and also a bit of selling in most USD crosses. The problem is that NFP was quite strong but didn't give us the quite signal we needed to say, okay, a Fed hike is imminent and tapering is coming in closer than we thought. In this scenario where I saw this kind of reversal, I'm a bit more confident to say that EURUSD is trying to climb back into 119, possibly 120 territory. So I'll be probably marking to think that we should see levels along here, 130, 125, 119.20 for as a recovery trade for the early in the week. And more or less I'm looking the same from GBPUSD, which was hurt last week because of strong selling. I'm expecting prices to sort of recover to these levels as well, around about here, 139 odds. Again, that's mostly just the recovery from the strong selling we had last week, a little bit of a reprieve that things are looking a bit brighter in terms of risk. So we have a risk on environment, and that should help both currencies to climb up a little bit higher. That's not going to be the main trade though. I believe the main trade for GBPUSD will be lower towards 136.40 as the weeks on move forward, specifically as we go deeper into the summer period. I'm expecting GBPUSD to find another leg lower. 136 I think is conservative. It could drop another couple of hundred pips below that, but I'll be interested to attack a short on a medium term to see if I can capture that move over there. Next week we have a few data points which I'm interested in, starting with the RBA meeting. The RBA meeting is supposedly to so people are expecting RBA to come over a little bit more hawkish, although most of Australia went into lockdown, so that's causing a little bit of a push and pull where you think they should be hawkish but they have reasons not to be, which is causing a little bit of a positioning dilemma. A lot of strategies say no, they will go ahead with being hawkish. They will start outlining where they will taper the QE assets. So that should obviously put a fire under AUD and all the AUD crosses. Should they fail to come good and sound hawkish as they need it, and don't need to do much to sound hawkish, then AUD will likely fall. In my opinion, AUD will find a bit going into the event, and I like to think after the event as well. But in my opinion, it's much easier to trade RBA meetings in the hours following the meeting itself. For instance, if I were to show you GBAD, I tend to trade that pair a little bit more actively around RBA events. Last meeting we had was on the 1st of June. If I show you that sort of pattern that emerges after the RBA meetings, you'll find it much more interesting to see if you can engage after that. So I'm going to go down into intraday time frame to hourly, scroll back all the way to the 1st of June. And in my time, the meeting comes about 5:30 in the morning, I believe, which was around here. So RBA meeting comes out, we get a push up, no particular reason, you get a strong push down for the rest of the day. And around the London fix, so around this candle, which is 4 o'clock at my time here, you see that market stabilizes. You see another 30 pip dip, but then you see the big reversal happening, taking over the entire move again. You tend to see those moves happening a lot with GBAD. After RBA meeting, it will make a move higher or lower, we're not sure. Around the London fix on the same day, it starts to stabilize and then swallow up the entire move again. So I'd be more interested to trade the RBA after the meeting, ideally even after the London fix, so I've got more lucrative levels to work with. That's to that. We have ISM services, PMI. Now, it is expected with the idea with the AUD/JPY as well. I bring that up because I've talked about inflation expectation. People are thinking, look, service PMI should be peaking. PMI should be peaking because of the way the economy has been evolving. With that, we also said since the beginning of May, sort of AUD/JPY topped out, inflation expectation topped out, and that could feed into the idea of selling AUD/JPY if PMI services do indeed disappoint. Recently, I haven't seen a lot of strong moves with PMI, so in the past it was much stronger, but I'm hoping that will turn again, and in the beginning of July, and that data point should give us an opportunity to possibly think about shorting AUD/JPY. It might not be the first leg of the continued trend lower, but for intraday trade, it might give us an opportunity to try to carve something out of it. The rest of the week, I'm not very interested in the data points. There are quite some important ones. So we've got CAT IV PMIs, and we also have the Fed minutes. They're all quite important. The problem is I don't really have a strong read on these, and there are a little bit wishy-washy ideas where you're not really sure what's happening. In my opinion, we're going to see chop in the markets for the remainder of the week, even post any of these meetings. We have some interesting things coming through. Obviously, the ECB has got, I believe, an emergency meeting on Thursday, so I'd like to see what's happening after that. And on Friday, you'll also have monthly GDP data that should move the pound quite a lot. So keep an eye on Friday. There will be data points for volatility, but at this point, not exactly sure what direction there will be. Last thing I wanted to talk about was EURNZD. Throughout the week, I've talked about EURNZD, where I think EURNZD should come down. One of the reasons is that the Central Bank of New Zealand, the RBNZ, said they are looking to raise rates fairly soon, next year. And that usually means that one currency should appreciate against another currency where the central bank isn't thinking about raising rates whatsoever, which in this case would be ECB. So I'm taking the short-term interest rates from the bonds. That's the 2-year from the German, the 2-year yield from New Zealand. I plot them against each other, or subtract them, in essence create a spread chart. If I were to overlay this with EURNZD, you can see where my idea of shorting EURNZD comes from. So generally, they've been moving really closely with each other, peaks and bottoms kind of coming together. And recently, we saw this huge drop in the short-term yield spread. And I'm expecting EURNZD to catch a leg down with it as well. So I'm hoping that's something we're able to follow throughout the next few weeks, as these trades tend to take longer to play out. But I think it will have quite some strong moves lower. We're talking a few good handles, maybe 300-400 pips at this point. I'm interested to catch on the downside as well. That's all I wanted to talk about. I'm wishing you a successful week. Hopefully you find these videos useful. The last video I recorded, actually, for some reason the voice did not come through. I did appreciate the comments telling me that, so thanks for being active on YouTube. And again, that's all I wanted to talk about. Wishing you a successful week. That's all from me. Bye.